Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.
Good afternoon. You are listening to Under One Roof MTL, where we are demystifying home ownership 1 week at a time. My name is Robin Flynn, and I am joined, as always, by the experts, the people you want to be listening to if you're trying to learn about real estate, mortgages, what have you. Fred Pichette and Martin Spalding from Fred and Martin Mortgages. Good afternoon, gentlemen.
Good afternoon, Robin.
And
Hey, Robin.
as always, we've got LJ Aguinaga of LJ Realties. What's up, LJ?
How you doing?
Very, very good. Guys, it's gorgeous, and I got a great parking spot out front. I feel like the correlation between my mood and the parking spot that I obtain when I come here on Sundays, that Venn diagram is a circle, guys. Let's start with our trivia question of the week, brought to you by Felix and Norton Cookies. You can visit their store at the Blue Haven Shopping Center, 3705 St. John's Boulevard in DDO. If you're the first person to text in the correct response to 514-800, you'll receive delicious cookies from Felix and Norton delivered straight to your door in the next few weeks. Question is, what is the term for the legal process of removing a tenant from a rental property due to non-payment of rent or violation of lease terms? If you think you know the answer, text in to 514-800 and make sure you include your first name, please, so that we can give you a shout out on the air. We like to do that. Guys, in the news this week, some excellent news. Last week, we talked about inflation being down in the United States. Numbers in Canada came out this week, and inflation is down in Canada, too.
2.7.
2.7.
Woohoo! So, guys, are we out of the woods yet, or are we still holding our breath?
Until we see rates drop significantly, we're not out of the woods.
Okay.
Obviously, this is positive news. This is exactly what we were hoping for. We're trending in the right direction. So we're getting kind of on the celebration train, and we're expecting it to stop at the station either in June or July. My bet's still on July. However, I'm curious to see what the gentlemen here have to say.
My bet is for June. I guess.
Wow.
I think people are waiting for that, and the inflation at 2.7 from 2.9 to 2.8 to 2.7. I think we're in the right direction.
Martin, what do you have to say about that?
The bookies are saying that it's going to be a 72% chance that it's more July than it is going to be June. June is really a 50-50, but you know what? I'm going to be optimistic. I'm going to go for June as well.
Oh, wow. So 2 out of 3 experts on this
That's
show
it. Why not?
say June. That's pretty good. That's a pretty good bet.
If you build it, they will come.
Exactly. Guys, I'm curious, though, if they do cut rates, it's not going to be by a ton. It's going to be by like 25 basis points, right? Will that impact inflation by having rate cuts? Because I know it's not a huge difference in your monthly mortgage payment, but I think psychologically, we've discussed this a lot. When rates come down, people are going to want to re-enter the market that have been sitting on the sidelines.
So shelter costs, if I remember correctly, are still above 5%. In terms of inflation and the impact it's having. So by lowering the mortgage rates, we're actually going to bring that down, which actually should help lower inflation a little bit. Now, again, there will be an inverse relationship between prices and the interest rates we're going to be seeing. So I'm curious to see how it's all going to play out. But at the beginning, especially because there's so much of a lag between when we make a change and when we actually see the impact associated there too, it should bring things down even further.
Yeah, but I think LG 0.25 basis point, it's not a lot. It's not really a game changer at all. Maybe by the end of the year, if
when they're at 100
basis point, 1 basis point, that could be a really game changer. But
now I have a question for you guys. Now I've got skin in this game in this question. I'm on a variable mortgage, as you well know. At what point do I convert to a fixed rate? My mortgage isn't up for renewal until next fall, 2025. As mortgage rates start to potentially come down this year, should I convert to a fixed rate?
If you've weathered the storm this long, I'd say keep riding.
exactly.
All the way till next year?
Oh, yeah.
No,
Okay.
I wouldn't do it. I'd stick it out until it's time for you to renew.
I've done the same thing, right? And it was kind of thing like
Yeah.
we missed our opportunity when rates started going up by 50 basis points or whatever. That was the time to lock in at maybe 3.15, if you will, for that period. Yeah. We didn't do that. We've gotten all the way up to 7.2 minus whatever discount you've had over this period of time. I think I'm personally at about 6.15 right now. So as it starts to come down, it's only going to be in the right direction, but it's not going to be worth to lock it in at 5%, we'll call it, as we're trending in that direction.
Okay, that makes a lot of sense.
But I want to hear the guys because, you know, we've been talking about 100 basis points this year. And as you know, there are only 5 occasions left now. So there's June, July, September, October, and December. That means we'd have to see the Bank of Canada lower its rates by at least 25 basis points over the next 4 or 5 occasions to hit that 100 basis points? Are we still in that mood that we're predicting that it's going to be 100 basis points between now and December 31st?
Fred is.
Yeah.
Fred is.
Well,
LJ, are you at 50 basis points now?
50 basis points. That's what we're going to get.
Okay.
we have an indication that it's anywhere between 50 and 100. Less optimistic people like you, LJ, they say 50. And maybe too much optimist guy like me say 100.
For the greater part of my lifetime, I've been the biggest optimist. And then after writing this 5% increase that really bit us in the behind, I must say that I know that they're going to really slow things down on the way down.
How come it feels like when things come down, they come down so much slower than the way they went up? It
They
feels
always
like
take
it
the
shot
stairs
up.
down versus the elevator up.
It's like that with credit scores too, right? You miss one payment and your credit score just plummets, and then it takes 2 years to rebuild it after that. In addition to that, guys, you sent me this text in our group chat because, yeah, the Under One Roof group chat exists. There's a lot of emojis in there about new rental laws this year. So there's a 3-year moratorium now on evictions for folks who are over the age of 65. What does this mean?
So those are two separate things, right? So let's actually
okay.
separate this. We have a 3-year moratorium on evictions, and evictions really pertain to somebody asking you to leave your property in order to substantially enlarge the property, substantially reduce or split the unit, let's say into 2 units more so, or to change the use. So if you have a residential property that you want to turn into commercial or vice versa. So on the entire residential front, though there's a moratorium, it was signed May 22nd for 3 years. You can't do that anymore. Okay. They have proposed to reduce the age, because right now in Quebec, if you are a tenant who is 70 years of age or older, have had the lease for 10 years or more, and are at an income aligned to $40,000, which is roughly I don't remember the specific name to it, but that's what it comes out to right now. You are protected essentially, unless somebody was replacing you with a parent of over 70, etc. They are now proposing to reduce that age from 70 to 65,
yes.
and
Okay.
to increase the income from 40 to 125% of this figure, which right now would be 47,500.
Which makes sense because how long has it been sitting at 40,000?
It fluctuates every single year. So it's
Okay.
essentially the amount to qualify for housing support in Montreal
Okay.
or Quebec.
Yeah.
Gotcha.
It's funny. The way I read into this is that they're gonna lift the moratorium before the 3 years if inventory comes up to 3%. So what I read into this is how low the current inventory is and the measures that the government has to take to protect not only the elderly but also families from being call it booted out of their places
You're referring
because
to
there is no inventory.
vacancy rates?
Vacancy rates, yeah. So if you keep reading through the article, they say that if it reaches 3% and above in terms of vacancy rates, they're going to pull the moratorium. So that what I read into this is how low the inventory currently is.
I think it's going to be an interesting game to see this play out, because the only way we're going to add significant inventory and increase the vacancy rates is by building, which we've been talking about on the show for the last couple of months, which has definitely been difficult to do, or a couple of condo conversion projects. So we have a lot of office towers in downtown Montreal, for example, and there's more and more talks of converting some of these buildings, which is not easy because the floor plans just don't always make the most sense. There's this really large buildings with elevators in the middle, and you just don't have enough space to make windows along the sides of it, obviously. So not every building is really fit for that, but the ones that are, we are looking into converting them to add more housing to the downtown area specifically. So I think that's really going to be the only way we're going to get past that 3% vacancy rates, because right now we're at an all-time low.
What a great idea that is, though, to deal with, everybody working from home and you have all these empty office buildings. And instead of telling people you need to come back to work, which is just not happening, people are working from home and that's a done deal. Convert them into housing, which we need. I mean, can we flex the rules a little bit to make it work?
Speak to the mayor.
All right, that makes sense. You're listening to Under One Roof MTL on CJD 800. I'm Robin, that's Martin, that's Fred, that's LJ. Up next, what sort of conditions can you include in your official offer to purchase?
Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.
This is your lingo lexicon on Under One Roof MTL. Conditional offer. A conditional offer is an offer to purchase a property that includes specific conditions that must be met before the sale can be finalized. These conditions might include securing financing, passing a home inspection, or selling the buyer's current home. If the conditions are not satisfied within a specified time frame, the offer can be withdrawn without penalty. For example, let's say Marco makes a conditional offer to buy a condo in Montreal for $450,000. His offer includes conditions such as obtaining a mortgage approval and the condo passing a professional inspection. If Marco cannot secure financing, or if the inspection reveals significant issues, he can withdraw his offer without losing his deposit. Once all conditions are met, the offer becomes firm and the sale proceeds to closing. This is why it's a great idea to meet with a real estate agent and a mortgage broker before you start shopping around so you can make sure that you have all your ducks in a row. This has been your Lingo Lexicon on Under One Roof MTL.
And you know, if you need a mortgage broker, that all you have to do is go to fredandmartin.com. That's the very first thing you should do when you're thinking about buying a home. I remember when we were first looking for our house, I spent an inordinate amount of time on the Centris app. And what I discovered is that real estate agents have access to more information than we as the general public do on the Centris app. So all of the houses on Centris that I sent to my real estate agent at the beginning, where I was like, ooh, we like this house. He's like, there's already 3 offers on it. I was like, oh, great. So I was like, I'm going to trust you then. You tell me what houses we should go see. And that's why you work with someone like LJ, because they have all the information that we don't.
This is why you need to get pre-approved and then looking for a property.
Exactly. Making sure you have all your ducks in a row is super important. Guys, according to a report this week, the Greater Montreal area should see property increases of 8.5% year over year by the end of 2024. LJ, are you expecting the same thing? What do your numbers say?
So I've been predicting for roughly the last 6 to 12 months that as soon as we see interest rates start to come down, that prices are going to spike about 10%. So this 8.5 is aligned with that. I think 8.5 makes a little bit more sense than my rough 10%, if you will. But the reality is there's been pent-up demand for 12, 24 months now. People have been waiting on the sidelines, and people are ready to make a move. And because of that, as soon as it becomes more affordable, we're going to see an influx of buyers when we already have low vacancy rates, when we already have low inventory. Even though we do have a lot more inventory now than we had last year in general, it's still not enough. So when you take all this into account and the fact that year over year we were up 5.1% in terms of pricing, and if we just compare Q4 2024 to Q1 2024, it was already 2.2% increase. So technically we only have another 6 and change percent to go over the next 9 months. That makes a lot of sense to me.
But don't you find that 8.5 is a bit high, or it's...
I mean, definitely considering our historic average, about 3% appreciation annually, right? For sure. But when you take into the fact that last year was a negative year for growth, even the year before that as well, but before that we'd been growing by anywhere from 8% to 21%, then one more year of 8.5, given the last couple of years that we've had, it makes sense to me right now.
But it really proved that an investment property or a condo or a single dwelling, it is a good investment.
Honestly, anybody I've spoken to over the last couple of months, even the last year, if you will, who's been kind of suffering with this increase in rates, obviously, and dealing with the increased payments and whatnot, if you've been able to weather the storm, you are in a nice equity position moving forward. You've been building that equity up for yourself, for your family down the road. And as long as you've been able to maintain this asset, long run, you're always going to be okay, is the reality.
Speaking of
LJ,
which...
question for you. Sorry. LJ, question for you. Do you have some clients that are actually making offers and they're trying to close after the rates come down? So in other words, they're making an offer, getting it accepted, and saying, I want to close in the middle of July or at the end of July.
So middle and end of July, 100%, because at this point, right, we're almost June 1st, right? That is within 60 days, realistically, 45 to 60. I mean, 30 days is arguably the fastest we can close anything. 45 to 60 is a very standard. Even up to 90 to 120 days is quite common, realistically. So to me, that's not even we're trying to get a better rate. That's just normal delays in getting something across the finish line. I would say that I haven't had people say, I only want to close in September, October, because I'll tell those people, hey, that's a little bit far. I mean, we can shoot our shot, and if the seller's looking for something like that, fantastic. But overall, that's not the reality. That's not what we've been seeing. So when you take that into account, no. But we're seeing a bit of everything, and I've told people...
Funny enough, actually, Fred and I have a client that closed on a deal, and they convinced the seller to allow them to take possession in November.
To notarize or to take possession?
To notarize.
Okay.
To notarize.
Again,
they actually live in the condo that they're buying, but they're going to notarize it in November, and they're hoping that to get a better rate, and I'm sure they will.
I would agree with that 100%. Now, what we've been telling a lot of our clients is that if we're looking to buy now, we can probably get a better deal now. right? So if you can lock up a deal now and kind of make that happen, and again, you did get the best of both worlds by locking up today's pricing with a closing in November, 100%. But it also depends on everyone's needs, right? Most of our clients need to move into this new property in the next, by July 1st or in the next 60 to 90 days, right? So if you don't have that need, and this is more so of an investment property and you want to potentially repossess it to occupy the following year, then 100% taking it back in November makes the most sense. You send your letters in December, assuming a normal July 1st rental cycle, and Bob's your uncle.
Sorry, go ahead, Martin.
Sorry, Robin. So, same chain of thought. So we know that activity is already up. Do you think that a minor rate drop is going to open the floodgates? Or are we going to have a really busy summer and fall?
I think that we're going to have a really strong fall market is the reality. I think the summer might be a bit calm just because historically in Montreal, the second we have Saint Jean Baptiste, then we have Canada Day, then we have construction holiday. So from roughly June 21st all the way through to the second week of August, the market slows down. People are focused on Montreal summer, which is arguably the best place to be in the world. People are enjoying being at the parks, going to festivals, doing all these things, and are on vacation as well. So the real estate market inevitably slows down. That being said, as soon as we get back, or let's say for Labor Day, I suspect the market's definitely going to be moving.
You don't think that we're in uncharted territory right now and that it may go against the norm this summer and people are still going to be active?
I mean, against the norm, we saw the COVID market, right? And the market was active all year round. It was 12 months of activity nonstop, right? So do I think it's going to be active? It might be somewhat active, but again, is a 25 basis point drop going to be enough? Are enough people going to be listing their properties during those months? It's going to come down to kind of supply and demand, right? So I don't know that we're going to have a huge influx of properties being listed to be absorbed. And I think that we're going to see more of that come the end of summer. So come the mid-August to September range in order to really have this play out that way to be absorbed.
Now, LJ, if people are curious, they're seeing these numbers, property increases of 8.5%, and they're like, how much is my house worth? Should I be considering maybe selling in the near future? LJ Realties offers something that people would probably be really interested.
I'd be more than happy to give you a free home evaluation.
Oh, please. So what is the benefit? Like, how does this work, first of all? People just call you up and just be like, hey, how much is my house worth?
That's it. I'll ask you a couple basic questions. So have you done any recent renovations? How many bedrooms, bathrooms, garages, backyard, etc.? With that information, we'll pull comparables and we'll give you an evaluation for your property. And it's a no commitment, no guarantees. It's simply here to provide you information as to how much we believe your home is worth. And that's before we go visit it. Obviously, if we can come around and see the property, it'll be even more accurate, and then we can really give you a full assessment. And really the goal here is just to provide you more information and empower you to make whatever decision you need to make next. Whether that's you want to sell now, in 5 years, in a decade, you want to refinance potentially, you have another project in mind that you're thinking about, you want to understand how much equity you would have access to. We're here to kind of help you answer all those questions and then connect you with Fred and Martin to go through the process if you need.
So if you do the valuation with LJ Realties and the number comes in a little bit lower than you were expecting, are you able to make recommendations based on their answers to the questions like, hey, maybe you should redo your bathroom or put on a new roof or upgrade the HVAC system? Is that sort of part of the valuation system?
100%. And we'll say, look, we believe the property is worth X because if you compare it to this one that had a new kitchen or this one that had a fully done backyard or this one that had a new roof and HVAC system, this is where the differential in prices are going to come in, and this is where people are going to try to reduce the price on us, right? So because of these factors, my evaluation is this amount. And again, if we want to take on some of these things and we want to take on some of the work, then by all means, we're obviously going to have a better evaluation, and that's where the difference is going to come from.
Now, I know we're probably going to talk about this in the next few weeks, but we can sort of tease. Maybe can you list like one or two home renos that add the most value to your property?
Kitchens and bathrooms.
Kitchens and bathrooms?
Yeah.
Well, are you in agreement, Fred, Martin?
Well, yeah, I agree with that because most of the time, the people, they don't really consider changing the kitchen, but it's the best thing to do, to get a higher value. And sometimes also I tell my clients, I says, if you go visit a house that you want to purchase, go there with an open mind, because if you don't like the kitchen, we could do a own plus improvement, a purchase plus improvement that allows you to change the kitchen at a mortgage rate, which is something really, you get in the property, you like everything, but the kitchen, it's too whole. Maybe just, add $20,000, $25,000, you redo your kitchen, and you have great property at a higher value.
Love that. Still to come, our Mortgage Minute, plus what sort of resources are available to Montrealers as moving day approaches.
Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties. This is the Mortgage Minute.
First-time homebuyers should consider these 5 factors before applying for a mortgage. This is your Mortgage Minute. Credit score and financial health. Ensure you have a good credit score, manage your debt-to-income ratio, and save for a down payment. Mortgage types and rates. Understand fixed versus variable and open versus closed mortgages. Mortgage affordability. Get pre-approved and know your budget. First-time homebuyer incentives. Explore the government programs and how these can work to your advantage. Additional costs and planning. Prepare for closing costs, welcome and ongoing property taxes, maintenance, and home insurance. These steps will help you secure a suitable mortgage and make informed decisions. And most importantly, to help you through all this, speak to a mortgage broker.
Don't just speak to any mortgage broker. Make sure you're talking to Fred and Martin. Those are your guys. You're listening to Under One Roof MTL on CJD 800. I'm Robin. That's Fred. That's Martin. That's LJ. Martin, you brought up something really, really important in your Mortgage Minute, and it was something I learned way later in life, and that is managing your debt-to-income ratio, managing your credit limits, keeping your balance on your credit cards below a certain threshold. I was told never have more than 70% usage. I mean, ideally, you're paying your credit card off every month. That's not always possible, but try and keep it below 70%. I was always just under the impression as long as you make your payments on time, your credit will be fine. Nope, that's not the case. So really great information in those Mortgage Minutes every week.
And I think to add on that, let's kind of unravel a little bit why that works that way, right? So what is the purpose behind a credit score? Because it didn't exist until I think 1990 or so.
89.
89,
right?
yeah.
So essentially, the only goal of the credit score is to tell creditors or people who are potentially going to lend you funds how liquid you are, how good you are at repaying things, and are you in a strenuous situation or not. Okay.
Right.
And when you are using more than 50% of your limits on your credit cards, on your lines of credit, on any vehicle of that nature, it's sending a sign to the entire industry that, hey, by the way, this person is really leveraged right now, and you might want to take a second look at the file. You might want to double check a few more things before you issue credit to this person. So that's why it's okay if you kind of, for 1 month it went up and then you were able to pay it back down, obviously, because it reports every 30 days, potentially every 90, and it'll correct very quickly. But this is the reason behind it. So when you have a lot of credit cards and you have them, most of them close to the limits, this is telling the entire banking system, hey, you probably don't want to give this person any more credit because they are tapped out essentially.
Yep.
It's when you find yourself in that kind of situation also, you really, and if you got a little bit of equity in your house, that's when you really should consider refinancing. Because what a lot of people don't realize is that a credit card compounds daily. So it becomes a very slippery slope. Yes, I mean, if you make your payments, the minimum payment, it shows good behavior, but you're never going to be able to knock it down to a reasonable level. And so we're getting a lot of calls these days where people are asking, I've got a lot of equity in my house, but I've got a lot of credit card debt. What should I do? And Fred and I always recommend that we refinance, because then you put everything under a lower rate of interest that only compounds once a year, as opposed to a credit card that compounds daily. So after 1 day with a credit card, you're paying interest on interest. And it's a slippery slope, and it increases exponentially.
And what I could say, Martin, is don't wait until it's too late. Don't wait until you're overwhelmed and your credit score is below 600, because then it's getting more complicated to do a refinance.
Yeah, absolutely.
Like if you're out there and you're struggling a little bit with your debt, you have to address it. You have to take the time to.
I wish that this show existed like 5 years ago, because I have learned so much that I was forced to learn on my own, right? I didn't even know you could just refinance and pay down debts until my mortgage broker told me that. When they looked at my credit report and said, wow, you guys have a lot of credit card debt. Let's just wipe that all out. And I was like, excuse me, what? Like, I didn't know that was something I could do by owning a home.
Get out of jail free card.
Yeah, exactly.
Yeah, but however, after you refinance, you can't start charging things against your credit
Right.
cards. It's like you got your get out of jail free card, and you can't get that every 2 years.
No.
So if you bail yourself out by using the equity in your house, don't start all over again by loading up your credit cards, because we can't do this on a yearly basis. There's just not enough equity going to be left in the house.
So do what I did. So we bailed ourselves out, and then I reduced the limits on my cards that I wanted to keep, and the ones that had really high interest rates, I just cut them up and stopped using them altogether.
Did you cancel them?
No, I didn't cancel them.
Okay.
Because usually it's not the best thing to cancel a card that you have a very
Exactly.
good history.
Yeah,
You
one of
know?
them I'd been with for like 10 years, but it had a high interest rate, so I didn't want to cancel it. So I just cut it up and stopped using it.
Perfect.
So that it still appeared on my credit report.
I would say keep your credit card, but try not to use it.
That's a hard thing to do for a lot of people. I had to cut it up, and don't just cut it up, delete it from your browser history. Because if you're opening up DoorDash and it remembers your MasterCard number, you're going to be tempted to use it.
The thing is, Robin...
Sorry, go ahead.
Go ahead.
Fred.
No, the thing is, Robin, is you could use credit, but try not to exceed 30% of your limit, pay on time, and if you got try not to close the card.
Yep.
Keep it, don't use it, but it's a privilege having a credit cards.
Yep, absolutely.
And if it's open for 10 years, that's an history that we need as a mortgage broker to show any banks or lenders who you are, how you handle credit.
This all goes back to the lack of financial education we get in high school here in Quebec.
Yeah, I agree.
Yeah, I just didn't learn this stuff.
It also comes back to wants and needs, right? So do you really need it, or do you really want it? So if you can put off the instant gratification, often that's half the battle.
100%, but you need to understand the repercussions of not doing so in order to really know what you're getting yourself into. And when you're 18 years old, you can just go to the bank and get a $1,000 or $5,000 credit card without really having any income already, and you don't know any better. And unfortunately, you didn't have these conversations with your family or close ones, and it becomes a very slippery slope. So you're 100% right that needs and wants are two very separate things that most people, especially 18 to 25-year-olds, don't know how to distinguish the difference. If they at least had a better education, a better foundation, I think that our entire society would be better off right now.
Absolutely. My economics class, all I remember from that class is learning the difference between macro and microeconomics. I didn't learn about credit card interest rates. I didn't learn about how to apply for a mortgage or a lease, or how to read the different things in the fine print. You're also taking out usually student loans because you're going to university around that time. So all of a sudden you're 25 years old and you have $20,000 in debt. Like, what a way to start your adult life. That's stressful for kids.
No, but we often see, clients that call us up, and, as we're going through their credit report, we say, "What's this?" And they're strapped, but they just signed for a car that's going to cost them $1,350, $1,500, $1,750 a month. Do you really need a car that's going to cost you that much money on a monthly basis?
Jeez, $1,700 a month car payment.
Yeah, it doesn't take much.
Fancy.
Yeah, exactly.
Nowadays, they're going up. I've even seen $3,000 a month car payments.
And what I see most of the time lately, parents co-signing cars for their kids.
Really?
Which is a good thing because they help them. But at the end of the day,
They're responsible
They're
now.
responsible for it. And then I got the discussion all the time. It says, Fred, it's not mine. It's my son. Yeah, I agree. He pays for it. But again,
on your credit report.
It's on your credit report. Two times $500 per month. It affects
Yeah, no, we had a guy call us up. He had 6 cars on his credit report. And I go, 6 cars? And you're strapped. He goes, well, 2 of them are for my kids and this and that and this and that. I go, that's just lunacy. You can only drive 1 car at a time.
Wow. My parents have never co-signed anything for me. I'm so jealous of these kids. Speaking of credit, guys, I know that anytime you apply for any sort of credit, a credit card, financing for a bed or furniture, whatever, your credit score decreases by a few points. Now, when you're applying for a mortgage and your mortgage broker says, okay, we're going to pull up your Equifax report and see where you're at, should you be stressed out about, what if you're like, I don't know if my credit's good enough, it's going to drop by a few points and then maybe I won't qualify. Should you be worried about that at all?
Not at all.
Oh, okay.
Because it's a soft it removes probably 5 points only from your credit rating. Obviously, if you just want to know your purchase power, I would say, okay, we don't have to. But if he really wants to get pre-approved and you want to hold the rate for 120 days, we need to submit it with your credit. And it's also a good thing to look at your credit prior to go make a purchase.
It's not a good thing. It's a requirement.
Exactly. It is. Because most of people sometimes say, don't look at my credit. Well, I just want to say, The three topic that we need in mortgages is down payment, credit score, and income. Which is if we
And
don't.
also when
You go ahead, Martin.
when yeah, no, we often have people who are embarrassed by their credit usage and they're not straight up with us. And they say, "Well, I got 2 credit cards and I always pay the minimums and I'm fine." And then you pull a credit report and they've got 6 credit cards. So just be straight up with us. We'll be able to build your file. And what we like to do is pull the credit at the very last minute. So when you're building up your file, just be straight up with us. If you got 2 lines of credit, tell us you got 2 lines of credit. If you got 4 credit cards, tell us you got 4 credit cards. Tell us if you got 2 cars, tell us you got two. It's all going to come out in the wash anyway.
It's like going to the dentist and they're like, "Do you floss every day?" And you're like,
Oh, yeah,
"Absolutely, I
yeah.
do." And they know you don't. They can tell. Guys, we just got a really interesting question here on the text line at 514-800. So we're going to get to that. You're listening to Under One Roof MTL on CJD 800. We are with you until 1 p.m. Very important question coming in at 514-800. Are there restrictions as to who is eligible to refinance their mortgage in order to pay off credit card debt? We were just talking about this before traffic, guys. Are there restrictions on who is eligible?
Well, as long as you qualify, there's no restriction.
So as long as you qualify for any sort of refinancing, what you're
Exactly.
doing with that money really doesn't matter?
Well, technically, you're refinancing because you want to pay off some debts. And because you pay off those debts, you qualify for a refinance.
Do you have to give them a reason for why you're refinancing? You can't just say, "I'm refinancing because I want to buy a boat" or something?
Banks and lenders, they're not stupid.
Okay.
They know, like most of the time you refinance to do a little reset or because you want to pull out some equity to do investment or renovation. But obviously, if you have $10,000, $20,000 or $30,000 of credit debts, this is the reason why most of people do.
I think Fred brought it up is that the most important thing is don't wait till it's too late because you need to qualify. So don't butcher your credit score trying to shovel the thing forward. If you feel that you're too indebted and you're not making your monthly payments and there's some equity in your house, refinance.
Is it possible?
Don't wait too long.
Is it possible when your mortgage comes up for renewal? Is it possible that you don't qualify again to renew your mortgage?
So you will always be able to just keep your mortgage essentially. So
Okay.
their bank's going to send you a letter. There's going to be 4 or 5 options on it: 1-year term, 2-year term, 3-year, 4, 5, etc. And if you want to keep that mortgage and not reset the amortization and not change the amount, and you've been paying appropriately, you'll always have the option to just continue, but you won't really have any leverage to negotiate.
Right.
So
With the current lender.
Exactly.
So if you decide that you want to take it elsewhere, you have to go through the qualification process again, and that's where you may not qualify.
Okay, that makes a lot of sense. We have another text in at 514-800. Somebody asking, why on Equifax does it show a credit score of 0 for me, even though I have credit and I'm paying on time?
So my first question is, have you had credit for less than 3 to 6 months? Sometimes it takes a few months before you see that first hit on Equifax. We just ran a credit check for one of our potential tenants, and he's had a credit card since February, and it did not appear on the credit report that we got.
Okay.
So that does happen from time to time.
Okay, so what can you do in that case? Because I've heard that no credit is worse than bad credit. So do you have to just wait it out until you have something that shows up?
It depends what you're looking to do. I mean, obviously, if you can provide valid justifications, everything is kind of workable, right? Hey, I just got here in February. I got my credit card. Here's the 3 last months of statements of the credit card. Here's my cell phone bill. You can see that everything's paid up to date. Rental receipts, even if it was an Airbnb, something, how much do you have in savings potentially? So again, if it's to get a property, it's one thing. If it's to qualify for something else, it might be a different process. But we do a sense check, essentially. Does this make sense? Can you provide us any facts or history that show that you are a good paying person?
Yeah, and not having a credit score, that doesn't mean you're not a good user of
Right.
credit. So like the newcomer in Canada, so most of the time they don't have any credit when they come here. But after 6 months, they're capable to prove that they pay on time their utilities and rent,
Okay.
and that's good enough.
Okay,
But
good
it's
to know.
important to establish a credit report. It's important to establish your credit. So even if you're not a heavy user of a credit card, get a credit card. Get some kind of line of credit that demonstrates that you're a responsible adult, because you need to establish your credit card or your credit report, or you need to establish credit. Not if you're thinking of doing something immediately, but you got to always think about tomorrow and the next week and the next year. So if you want to buy a house, the first thing they're going to do is they're going to pull your credit report. If you got no credit, then you're going to have to tell a very convincing story.
Yeah, makes a lot of sense. LJ, it's time for my favorite part of the show every week when you...
Food time.
Yeah, food time. And I love
Property time.
property time. I am like, even though I own my home and I have no interest currently in purchasing, I still scroll on the Centris app. I love looking inside people's houses. So when LJ does this like property of the week, love it. Love it. So what do you got for us this week?
This week I want to highlight 3205 Rue Montcalm in Boisbriand. This incredible corner unit is the largest model available in the row of townhouses. The property features 2 bedrooms, 2+1 bathrooms, and 2 garages over 4 floors. With proximity to the Faubourg Boisbriand shopping center, residents are close to all the essentials, including shops, restaurants, banks, and much more. The property is listed for $700,000, and my favorite restaurant in the Faubourg has to be my dad's go-to restaurant when I was growing up, Baton Rouge. I usually go for the New York strip loin with the peppercorn sauce and a side of their spinach dip.
What about the ribs?
Ribs are also close second. For whatever the reason, the steak has just been my go-to there. But whenever I mixed it up, it was definitely the ribs.
Wow, 4 bedrooms.
4 bedrooms. This property. Yeah.
Wow, that's really, really
with
cool.
a full mezzanine, it's got an ensuite up top. It's a really spectacular property.
Wow. Okay, I'm
For
going
a
to
big
have to
family.
work it.
For a large family. Right now, it's honestly a couple of 2 people with 2 cats.
Right.
But you could fit a very large family in there. You got a nice little wine cellar in the basement, access to the garage, brand new furnace system. Honestly, it's tip-top.
Each cat has their own bedroom currently, which is
100%.
nice. Guys, our trivia question of the week brought to you by Felix and Norton Cookies. We asked earlier, what is the term for the legal process of removing a tenant from a rental property due to non-payment of rent or violation of lease terms? The answer came in first from Neil in Côte St. Luc. Eviction. Eviction is the term that we were looking for. Guys, what did we learn this week? I learned that it's very important to take good care of your credit, and that it's not just about making your payments on time, that it's also about your overall credit balances. I also learned that it's kind of a toss-up, flip a coin on when interest rates are going to come down, June or July. But I would say the consensus is we are confident that there will be a rate cut this summer.
Yes.
Yes?
100%. Yeah.
Excellent. That is fantastic news for everybody on a variable mortgage like me. And I also learned this week, guys, that there are new rental laws that are very important. So we went through the 3-year moratorium on evictions and the new changes for the ages for repossessions. Potential changes to ages from 70 to 65 years old. Were there any other things that stood out from the rental bill?
No, those are the
Those are
big changes.
the big
We
changes?
had Bill 31 in February, so we had
Yep.
a lot of changes to the rental laws this year to begin with. But
Yeah. So we've learned a lot this week. And if you missed any of it, by the way, you can always check out the podcast. If you just tuned in at like 12:30 and you're like, oh man, I missed the first half hour, don't worry about it. We got you. You just go to Spotify, Apple, iHeartRadio, wherever you get your podcast, look up Under One Roof MTL. It'll be there by this evening. If people want to get in touch with you, LJ, how do they reach you?
You can reach out to me for real estate services on my website, LJ Realties. You can also find me on Instagram, YouTube, TikTok, Facebook, and X, formerly Twitter. My handle is LJ Aguinaga, or for more information on our listings or real estate team under the handle LJ Realties. We are looking for motivated real estate brokers this time, so if you're interested in joining the industry, I have a full training program for you. Give me a call. You can reach me at 514-500-4040. Feel free to text that line as well. And for property management services, we will be launching the new branding of it under plexdoctor.com. Keep a lookout for that. It will be coming out soon. I had one of my clients tell me that he's a surgeon, and he's actually obviously a formal doctor, and he says, LJ, I'm a great doctor, right? Like, my clients have great things to say about me, but you are the Plex Doctor. You take care of all of our properties, and you do an excellent job, so thank you for that.
I like the name, Plex Doctor.
Thank you.
It's really good. Very cool. Very cool. Fred, Martin, where can people get in touch with you guys?
Actually, I just went to check out LJ's listing of the week, and if you're looking for a property in that area, you should jump on this house. It is stunning.
It is spectacular.
So to get in touch with us, fredandmartin.com, fredandmartin.com, very easy. All our coordinates are on our website. But literally, I would put an offer down on this house, LJ.
Thank you. I can't wait to
You have your people call his people.
just call me directly. You got my cell.
I don't need a second house, but this one's stunning.
Amazing. You know what also is the benefit of hanging out with Fred and Martin for your mortgage and then getting LJ to find you a house is you guys work in the same building. So when you guys are like stopping over at Fred and Martin's office, then you can just walk down the hall and go say hi to LJ and start looking at properties. Like, it's just very convenient, which is
no,
really
I
nice.
gotta say we did a few deals together and it went very well and clients were very satisfied, that's good enough for me.
I mean, having to find parking twice, that's difficult. You know, you just do it once, you get everything taken care of. Like,
There's indoor parking in the building.
live in the dream, guys. Just live in the dream. If you want to get in touch with me for anything, just go to my website, robinflynn.com. That's Robin with a Y. If you missed anything, as I said, you can listen to the show in its entirety on iHeartRadio, Spotify, Apple, wherever you get your podcasts. For LJ, Fred, and Martin, I'm Robin. This has been Under One Roof MTL.
Under One Roof MTL, hosted by Robin Flynn, featuring mortgage brokers Fred and Martin and real estate expert LJ Aguinaga. Presented by Fred and Martin Mortgages and LJ Realties.